All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thank you so much for taking the time out of your day this morning and every morning, 9 a.m. Eastern Standard Time here on the YouTube channel. If you are new to the channel, make sure to hit that like button if you like these videos, comment any of your questions, make sure to hit that subscribe button, and turn on notifications for any new videos that come out. We do the Morning Note every day the market's open. And on Saturday, we do a recap of the week, including our trades and going over the whole market and previewing the next week over and over again. We love it. Good morning, everybody. Let's go ahead and go around the horn this morning. Dow futures are up 104 points. NASDAQ up 50. S&P 43.31 on the futures side. We did have a short trade yesterday on futures. Well done to the team that took it. Russell 1788.58%. The IWM puts that I went over last week were literally a day too early. It hit deep in the money, those IWM puts. 174.36. We had the 176 puts. Killer. Let's see. 10-year treasury yields are pulling back today, 4.495, so below 4.5%. Crude oil is up 2% this morning. Let's go ahead and bring up a chart rather quickly. I had a question on crude. And the only thing about crude oil is the fact that we have the inventories report today after the bell. Today at 10:30, excuse me, not after the bell. So looking at this point here, resistance, this is your October highs, this is your November highs. We got as high as 93.44. So what I'm looking for is that if we do break above 92.50 after the inventory report, I could take a look at targeting that resistance here on 93.66. for a possible buck, and then we can use 92 as the stop, or we can lower the position size and kind of give us a little more room to get to that target, if not a breakout, because if you break above it, we can get to 97. So what we can do here is, again, after the inventory report, we can talk about putting the stop a little wider, maybe down to like 91, and give us a 97.5 target for TP2, or we can use this as TP1, take profit 1, 95 is TP2. So we have a little bit of flexibility here. We know we have that golden cross. We talked about crude oil and the energy names. Energy stocks have not been moving with crude oil, unfortunately, 1 for 1. If you guys remember, I went long XLE and we got reversed on, even though crude was up. So 92.51, let's keep an eye on that. It's a great chart. If it is resistance, then we got some more down to go. We're talking about possibly retesting 85. Crude oil can be volatile, so we'll be very careful, watching that very, very closely. Let's go ahead and add the RSI, so at least we have a little bit of a view. We can be overbought again. We were very overbought here around 80.79. That was right around the last time we were at these levels. We're at 70 again. So thing is, especially in this tape, that's been a little bit wacky. Don't be surprised we get possible reversal here. This could be possibly resistance, but we'll let the inventory report come in, and then we'll see where we go from there. Let's go to S&P 500 futures. I put on the headline this morning, are we oversold yet? So let's kind of put a little bit of emphasis today on that. 70 being overbought. This is called the Relative Strength Index, or RSI. It's another indicator everyone can use. You can use as many as you like. People like tons of tons of different chart patterns and notifiers and stuff like that, indicators. It's really up to the person on what they like. So again, I'm going to show you here that does it matter? Yeah, it matters when it works, and it doesn't matter when it doesn't, just like anything else. So we're at a 35.32 on the daily in terms of the S&P futures. So we're not oversold quite yet. We have been at this level before of oversold right around the 18th of August. But see how much lower we are. So we can always get a bounce and take another leg lower. 42.20 to 4,200. Remember, we talked about that this weekend. If you haven't seen that video, I talked about it on Saturday. So we talked about corrections and how much it would take to get us to a correction, about 4,200 or so, which coincides with the 200-day. That'll be considered to me kind of the level of, last support. If we break that, then, you're talking 4,000, fair, 4,100. But 4,200, that's kind of the level I'm looking for, where I think stocks get really, really cheap to the point that it's going to attract buyers. And the news of everything, the dollar yields might be priced in at that point at 4,200. Again, anything could change, but it does coincide with the October flush that we're expecting due to seasonality. So we are not oversold yet. Let's take a look at NASDAQ futures. Same deal, not oversold yet. But yet we haven't tapped those August lows yet, around 14,602. So we're about 140 points, 150 points away from that. Not the best daily close. We haven't opened yet, but it is getting a little bit of a relief bounce. Could this be more, more of a relief bounce? How much more can we get? Really, until 15,000, you really can't do much. They might just, chop you a little bit, bounce us, and then kind of roll us over. So until you get above 15,000, you really can't go much in terms of NASDAQ long side, unless you're trying to play some kind of good news continuation above 14.8. And even then, that's going to be tough. The only good side to that end of the table is the fact that put call ratios are so depressed, meaning there's a lot more, elevated, excuse me. Puts are elevated versus calls. So again, you're going to get calls being a little cheaper, obviously, than puts, since the expectation on this price action, the highest probability is downside. So that makes puts more valuable, more expensive. If you're betting or you're trying to, get into calls, for example, you're buying them cheap here. And they're cheap for a reason, because the trend is to the downside. So again, just be careful if you're trying to play reversals. We really don't have tons of news flow at this moment. We do have the inventories. We do have GDP tomorrow. And we got Fed speakers really, I think 13 until next Tuesday. And there's no buybacks going on. We have a blackout on the buyback period. I posted that on the blog this morning. Let's see if I can find that exact quote. The buybacks. Here we go. We currently estimate 84% of S&P 500 companies are in their blackout period, with 90% in blackout by the end of the week. We estimate blackout to end October 20th, 2023. That's Goldman Sachs. And again, we talked about that October seasonality, where we dip into the mid-month and then we rally towards the end. Very similar to 2022. If you guys remember last year, look at the price action then in October. Pretty depressed sentiment as well. September, we got that leg lower. September, we got that leg lower. August was different. Big boost in August. July was different. Was up a little bit, but July is where we got the pop in terms of the NASDAQ. So tons of moving parts, as we know. Mystical Arab is asking, what is a blackout period? The blackout period meaning you can't do something, but blackout period in terms of a buyback, meaning companies cannot buy back their stocks during this blackout period. And then after that period, they can start buying stocks for their balance sheet. For example, Apple, Google, instead of paying a higher dividend, let's say, than an energy company, what they do is they just buy back their stock, which lowers the supply and in theory makes the stock more valuable because you're getting buyers, meaning the company itself. And it's obviously a good thing to see when you see the company that you're investing in buying their own shares. It shows confidence in the company. It shows confidence in moving forward. And of course, the directors or whoever's buying the company, they obviously want to make money too. So they wouldn't invest in the company, the idea being if they didn't think they were going to be moving higher or more valuable down the line. Gold futures, 1908, that's down 0.57%. Silver futures down 1.3%, 22.89. Copper futures, $3.64. That's down 0.21%. Remember, we talked about copper being important. Remember, we were above $4. That was a risk-on move. Now we're getting copper pulling back. Commodities pulling back other than oil. Euro dollar, that's down 21 pips. 6-month lows on the euro dollar. 6-month lows on the pound dollar. That's 121.48. 149.18. Wow, we're getting close to that 150 level on dollar yen. It hasn't been that high in a while. So we'll see what the Bank of Japan decides to do. That's what makes that pair volatile. So I would kind of stay away from the dollar yen pair for now, even though the dollar is breaking out. We are pulling back now, 106.35, but even the dollar is at year-to-date highs. So hell of a dead cat bounce from when I said in July. I knew we were going to bounce, but I didn't think we were going to rally the way the dollar is. Bitcoin futures, 26,825. There was talk about the Bitcoin spot ETF being approved, kind of that push to the SEC to get it done by Congress. No word if that's been approved or anything like that. We'll let you know if anything changes. 1627 on Ethereum. That's up 2%. That's where we are in terms of risk on, where you have crypto being up. The VIX down 3.85%, still below 20. 20 being that psychological number that everyone looks at. Anything below 20 tends to be pretty good in terms of volatility. Anything above 20 tends to be elevated. Dollar index 106.36, like we discussed. And there we are. I do have some Apple puts. We got to 30% yesterday. I held it because, wow, we were rallying. And then all of this is just overnight. So these overnight moves happen, as we know. That's nothing new. We know that's low volume. The news of an Indian processing plant for Apple, that it was on fire, now it's contained. Maybe that's where we're getting a little bit of a bounce. I haven't seen any new info regarding the iPhone numbers. Just playing the price action, we still broke that 173 level here on the, or 173, 173.76 level to around 174 on Apple. That was the support that was holding for the past couple of weeks. Finally broke down. We'll see if we get continuation as we expect. We have 169.87. That's your 61.8 fib extension. We broke below the August lows. Now we're looking to test the May and actually the May lows. And you also have a gap to fill here at 166. Starts getting really close to the 200-day. So very, very interesting to see if Apple does reverse this move. Getting a pop really on nothing. So we just got to see what the market does. This is what happens. Good morning, Carlos. Where do you see the SPY closing at the end of the year? Like I've said, I think we get to all-time highs. I think that we rally towards the end of the year. Personally, that's what I think. Even Bank of America agrees. Some of the investment banks see a rally about 19%. That's what I saw on bar chart towards the end of the year. So again, that's really a question of where you're counting it from. So I still think that the fourth quarter, seasonally speaking, historically speaking, will be strong for the S&P 500 in a pre-election year. Next year is going to be a little dicey, in my opinion, but this year I think we get that bounce. We'll tag all-time highs, and then we'll pull back. So good morning, Carlos. If gold and Apple keep moving lower, can that lower the markets even more? In terms of gold, that's where it gets interesting because you're not getting that risk off, sell everything, I need gold because the world's going to end. You're getting more of a liquidity issue. So meaning just raising cash. So when you have higher interest rates, for example, maybe you have a gold position or own gold and you just want to have some extra cash, you're just going to sell it. So there's no real rhyme or reason other than the dollar being stronger. But look, you don't have the supply kind of optionality the way oil does. Oil, you keep drilling, you can stop drilling. But gold, can you stop mining or you start mining? Again, you're not getting that fear out there of the world ending. So not a lot of people are buying into the yellow metal. It seems that the king dollar, that's why the dollar is soaring, versus other other currencies is absolutely crushing it. So the dollar is king right now. That's what the market is telling us. If Apple goes lower, again, 200-day moving average, that is a great target to look at. Could it be just throwing the babies with the bathwater out? I mean, Apple hit all-time highs at the earlier this year. So it can't be, doing that bad. Their growth isn't the best. But I do think that their new phone is absolutely amazing. I think they're going to knock it out in terms of demand. Let's hope. But as of right now, just playing the technicals, it's downside still. We're still breaking down. So really until we start getting a little bit of a bounce, not much you can do in terms of Apple other than watch it slowly go down more. 108.73 is the 23.6 fib on the dollar, Alex. We did golden cross on it. We are above the 20. We're above the February highs. Now we're looking to see if we get back to the November highs. That's around 107.91. How much can we go? Well, we are way overbought on the dollar in terms of this chart. The question is, do we reverse and get back to 106 for a retest? That might be a little bit of a help to equity markets. Unfortunately, what's interesting is that even the dollar's being up, stocks are up. So could be a dead cat bounce. It could be just the start of support being holding. It could be anything until we see how we open. Let's take a look at SPY. Let me get out of this. We'll go to SPY. Yeah, not pretty. Got that breakdown. Still got that gap fill here at 422.95. That would be my target. The question is, when do we get there? That's at least on the daily, but oversold right at 32. We'll see on the hourly. Got that breakdown below 429.61. Yeah, I would say that gap's going to fill. That's why I played S&P short, not S&P future, S&P future short, not S&P SPY, because of the option decay and the time decay and all that good stuff. We had Apple instead. So watching it closely on SPY, but that's kind of the target we're looking for. And then Tesla's actually been holding up. Look at that. Right at the 100-day. Same as NVIDIA. Get me above 250. I'd be interested in Tesla. But if we break below the 100 again, you might start looking at possibly getting back down to around 230 to 220 area. Not enough to trade it, but again, the 100-day is important. That's right around 240. Let's see if it holds it. Biotech stocks. Which biotech stock? Would DraftKings be a good buy at $25? Let's see it. I think a good buy on DraftKings would be right at 22. That's your 200-day. As long as you're above it, nothing good happens below the 200-day is the saying. Holding the 100-day, very similar to Tesla, so got some resilience in this name. DraftKings NFL season only growing. I think DraftKings also opened their sports book in Kentucky. We're really just looking at DraftKings and looking at federal legalization. We don't know if that's going to happen. It is state by state. Maybe Florida gets it. That would be the largest market for gambling if it was approved. So we'll see how the market reacts to kind of any future elections in terms of, or future court cases in terms of legalized sports gambling. And it's still state by state. So DraftKings and FanDuel and all these companies are really restricted on where they can make money. It's got to be unleashed federally. That's where you get, more customers, and that's where you get the more revenue. 22 in terms of the price action here, that's what you're looking at for support. Your thoughts on biotech in 5 years? I would say the best bet in terms of biotech is to focus on fat loss companies, companies that make fat loss products. Have you seen Eli Lilly? Because of one drug, Eli Lilly is absolutely on fire. But you look at Pfizer, is absolutely the complete opposite, right? And you would think Pfizer, Viagra and these other drugs, Merck and these other drugs, and I played Merck stock and options and Pfizer shorts on options too. But Lilly, because they have that one fat loss drug, I think that's the company. If you can find a company that does any kind of medication for fat loss or anti-obesity, that's going to probably be the winner down the line. It's very hard to find a company like a Moderna hit right during COVID and then they get the vaccine. Very difficult to kind of find those names. You really kind of have to get lucky unless you're really looking for just, a complete lotto ticket. XBI is the ETF, and right now it's kind of holding that support of right around 73 or so. That's a support from March this year. So oversold on XBI, sure. It's going to be tough to raise capital for future studies in terms of drugs when interest rates are high. So again, it's going to be the cost of R&D, research and development for these kind of pharmaceutical companies. Again, that's going to change as money policy gets tight. So it does affect, the Federal Reserve does affect at least these small biotech companies down the line. A company like Apple, not really. I mean, they're so heavy in cash. Microsoft too. It's really like the small caps. Those names are the ones that get hit with tighter rates. Let's see here. We just got an alert on crude oil, but again, at 10:30 we have crude oil inventories. So I'll be watching that closely. I just don't want that to reject. So crude oil continuing to go, and we'll see what the market brings, guys. Have a great rest of your morning. We will see you guys tomorrow on the Morning Note here on YouTube, and I'll catch everyone else on the Live Market blog. If you would like access to our Discord, make sure to take a look at our description box below. The website is www.gar.capital. Sign up for the free plan. That'll get you on the server. Appreciate you guys and the support as always. I'll see you guys tomorrow. Cheers.